Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with a great income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with a lot of risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer that get delivered to your inbox. Oil has really staged an incredible comeback in 2023. Rising interest rates and fear of recession saw crude hit a low of $63.57 per barrel in April. A lot has changed since. Record demand, production cuts from OPEC, and chance of avoiding a recession has helped crude oil go all the way to $90 per barrel. And analysts are predicting that West Texas crude oil could hit $100 per barrel in the fourth quarter of this year. Analysts at JP Morgan see oil hitting $150 per barrel by 2026. And that's great news for our pick today, called Sitio Royalties Corporation, traded on New York Stock Exchange under symbol STR. John?
Yeah, you're right, Mo. Thanks. Sitio Royalties Corp is a mineral and royalty company that acquires, owns, and manages oil and gas, mineral, and royalty interests. And they're operated by a diverse set of exploration and production companies. It focuses on investing in mineral and royalty interests in the Permian Basin and other productive U.S. oil basins. Now, as a mineral company, it buys mineral and royalty interests and then collects royalty revenue from exploration production companies that drill wells and sell oil and gas from the lease. Its asset base is diversified across more than 22,000 wells and more than 240 operators. And its operators are like the who's who of the oil and gas industry. Some of these include Exxon, Chevron, ConocoPhillips, and Pioneer Resources. Now, since March, the company has closed numerous accretive acquisitions for an aggregate of around $248 million. And these were funded about approximately with 27% equity and 73% cash. So, you know, the company is pretty cash rich. These acquisitions actually increased Sitio's Permian Basin footprint by around 7%. That big strategic acquisitions, but that's small compared to the $4.8 billion acquisition of Brigham Minerals, Inc. closed in early 2023. Now, the transaction brings together two of the largest public companies in the oil and gas, mineral, and royalty sector with complementary high-quality assets in the Permian Basin and other fossil-focused, oil-focused regions. Brigham, on its own, has also been very busy on the acquisition front. In August 2022, it announced the $122.5 million acquisition of the Permian Basin and mineral royalty interest from Avant Natural Resources.
Now, John, let's talk about some numbers. I see that this company reported record production in the second quarter of this year.
Yeah, you're right. For the second quarter, ended June 30th, Sitio Royalties reported average daily production volume of 34,681 barrels of oil equivalent per day. And that's comparable to the first quarter of 2023. It also declared a record high average quarterly production volume of 34,681 barrels of oil equivalent per day. Some other quick numbers that reported second quarter adjusted EBITDA of $127.2 million and pro forma adjusted EBITDA of around $130 million.
To ask, with record production and solid profit numbers, how are dividends looking here?
Well, again, strong continued cash flow has allowed the company's board to declare a second quarter cash dividend of 40 cents per share, or $1.60 on an annual basis. That's for a yield of 6.6%. Now, the company's goal is to pay a dividend of at least 65% of its discretionary cash flow to shareholders, which in the second quarter was $94.8 million. This leaves the company with 35% of its discretionary cash flow it uses to protect its balance sheet and also make opportunistic cash acquisitions. Now, because the company's quarterly cash flow fluctuates, its dividend payout will as well.
And lastly, let's talk about how is STR Stock doing?
Well, Sitio Royalty is enjoying tailwinds from strong oil and gas prices, and now that's also spurred Wall Street to take a bullish stance on Sitio Royalties stock. STR stock is up around 20% over the last 6 months and 23% year over year, but the outlook remains even brighter. Wall Street analysts have provided a 12-month share price target for STR stock of approximately $31 per share to $34 per share.
John, thank you so much for your analysis. Just to recap, Sitio Royalties Corporation, traded on New York Stock Exchange under symbol STR, is a mineral and royalty company with growing position in oil-rich Permian Basin. Over the last number of quarters, this company has done several acquisitions. In late 2022, the company closed on Brigham Minerals merger, a move that added close to 85,000 net royalty acres to its portfolio. This will not only help energize its average daily production volume, but the management has said that it expects shareholders to benefit from a substantial increase to its already frothy high-yield dividend. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.